Hey, how's it going, everybody? Welcome back. If you're new here, my name is Jonathan Sandoval, and the reason why I started this YouTube channel is to document my process to becoming a profitable day trader. I am a long bias trader. I trade OTCs and listed stocks. I'm not biased towards listed or OTCs or going long or short, but right now my main focus is becoming successful going long. Now, I do make long form content of me diving in of my trades. Something I've said before is making these videos help me probably more than they help you. Um, but if you're not into long form kind of content, then this probably isn't the spot for you. But if it is and you want to learn more about day trading, or you're just interested in seeing my process, then this is the place for you. Nothing in here I'm telling you to teach or do. All I'm doing here is just telling you what works for me. And if you find that it's something that works for you as well, then awesome, leave a comment. But other than that, just here to document my process. I'll see you guys in there. Thank you guys so much for coming in. If you guys haven't subscribed already, I'd really appreciate that. Thank you. Right, man, it's like I did a commercial back there or something. I don't know who the heck that was. Thank you very much. Please subscribe. Okay. All right. So check this out. I've been finding some consistency the past 3 weeks, and I want to document this. And everything that I'm going to say within this video, I've already said in my past videos, but it's kind of just bringing it all together into one. So, if you guys get anything out of this, awesome. If you guys don't, then fine. But please subscribe anyways. Okay. What I'm going to do first is I'm going to go over some charts. I'm going to go over a couple trades of my consistent wins. I'm not going to go over any losses in this video. If you guys want to see any losses, go watch all of my other videos, right? This video is just going to be about my consistent wins. So first I'm going to show you guys some charts. I'm going to walk you guys through them, maybe 2 or 3 charts. And then I'm going to go over a list of my criteria of what's been helping me before I even enter a trade, right? So the past 3 weeks, I'm not saying I haven't lost. I have lost, but they've been minute compared to my wins. Now, I am trading with a small account. I still haven't passed break even yet, but I'm almost there, so I'm happy about that. Some of the stats that you see on what I show you guys right now isn't the truth, isn't accurate. There we go. All right, let's get to it. So the first one I want to show you guys is I want to show you guys my AMC trade. If you guys, today is, what's today? Today is February 11th, Friday. If you guys follow me on Instagram, if not, click the link in my description. Bam, bam. Post my charts. So I did 2 trades on AMC yesterday. Two trades on AMC made $26, a total of 7%. My setup was a multi-day breakout. My mistake was thinking twice before cutting. Okay, so I was playing a multi-day breakout. The previous day it was already showing strength. It was doing really good, so I put it on my watch list for today. Not today, but for this day. And it showed strength right in the morning. So I was like, for sure, let me go into it. Definitely gonna go into this. In this stock particularly, I was practicing sizing in and sizing out. Why? Because once you start trading with a larger account and you start buying like tens of thousands of shares, your hand get exposed. Ask me why that's a bad thing. I'm not sure why, but I do know that if you go into it, like let's say you want to buy like 30,000 shares or 50, 60, 70,000 shares, whatever the case may be, with that much size, you're affecting the movement of the stock. If that makes sense. And then not only that, you could get partially filled. So like let's say you want 30,000 shares and you go and then you only get like, I don't know, 7,000 shares, And then by that time, either this move is already made and it's like, well, you're not going to go sizing in because now, your reward to risk ratio is just not there. So I'm kind of practicing that for when I get a bigger account. Now, I only took 20 shares, right? So 10 and 10. Right here, I exited. Here I exited 10. I exited half my. Oh no, I'm sorry. Here I exited 5. Collect gains. Here I exited 10, and then here I exited the other 5. Okay, and the reason why I was thinking twice before cutting was because I've just seen this just go down, and I did not want to be in it for that, to be honest with you. So I was just like, all right, cool, I'm just gonna cut. But my mistake was thinking twice before cutting. So I ended up going back into this trade with the little bit of buying power I had left. And I made two mistakes. Made two mistakes here. Okay. So I got in again right here. Right? Because it consolidated. It showed strength that I was going to keep going up. So I was like, okay. Okay. But it was such small size that I didn't end up selling right here. And something that I've said in my past videos is I want to start sizing up into these trades, because when I see $7-10, I don't want to take it. But I'll be more willing to take, 30, 40, 60 bucks. Know what I mean? And with this one, I just didn't take it. I was actually dumb, and I added to my position like one share because I'm a degenerate. And it immediately went against me, and I just cut. I got scared. This isn't something I should have taken anyway. So this whole trade was just bad. This whole trade was bad. Even though I could have sold right here, yeah. No, once everything's played out, yeah. But this whole trade, everything in and out, I just shouldn't have taken it. Let me show you guys BHG. BHG was just, wow. So I only made $21, okay? And it was a total of 10% return. But the thing that I love about trading is that these here, let me go down. Let me give you guys something to lay your eyes on, you know what I'm saying? The one thing I love about trading, you guys, is that these patterns that I'm trading right now are going to be the same patterns that I'll be trading when I have a larger account. So even though I make, 20 bucks and it's 10%, that 20 bucks could easily be 200. That 20 bucks could easily be 2,000, 20,000. Right? And oh, Jonathan, you're exaggerating. Really, I'm not. This is just the way trading is. This is why they say small gains add up. Just go for singles and don't hit home runs all the time. You go for that 5, 10, 15, 20% gain, and over time, your account will slowly start to add up. But not only that, since you're tracking your trades and you have data on which trades you do well on the most, when those opportunities occur, you could size into those trades and start doubling and blah, 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 blah. I love this game. So, I just wanted to do a little, I just wanted to explain that to you guys, because you guys see like, oh, you made 20 bucks. You're only 10%. Why are you wasting this time? No, these patterns play out over and over again. These 20 could easily be 20,000, 2,100. You guys got. I'm not gonna explain myself, but I felt like that was worth mentioning. So I played the multi-day breakout. I didn't put any mistakes because I honestly don't see any mistakes other than not holding to the very top. But I'm not mad with this trade, because if I took larger size, this would have been beautiful. Yeah, multi-day breakout. I don't know what else to say about this. That's all. Actually, I do know what to say about this because I'm gonna go over it on my list that I'm gonna show you guys. So this is the day before. This is the day before. So this day is the 22nd. Oh, I'm lying. All of this is the 22nd. Wow. Okay, cool. So in the morning, spike, consolidated spike, came back down, hold levels where it was consolidating, spike back up, having resistance around the threes, came back down. It didn't. It hit a lower low, right? It didn't break past 290. It ended up breaking out past resistance of the threes. Boom, breaks out, consolidates, spikes back up, consolidate. You guys get it? You guys get it? I hope you guys get it. So I got in, and it did exactly everything else. Consolidate spike, consolidate spike, consolidate spike. Hold key levels. Hold key levels. Solid day spike. Just freaking trading the chart, man. I don't know what else to say. Textbook play. Textbook play. Let's go on. Let's go on. Let's go this OTC Swizzle. This is my second $100 trade. So OTC Swizzle. My problem here was selling emotionally. I'm so glad I'm going over this one. Selling emotionally. Jonathan, what's an OTC Swizzle? An OTC Swizzle is when it starts well for the day, and then it just consolidates for midday, but it's still holding near breakout levels. It's still holding really nice levels, and then it consolidates, spikes towards kind of mid-afternoon, and then towards the end of the day, it just goes. So this one's definitely worth explaining. Check this out, you guys. So OTC Swizzle, I got really good risk to reward ratio, so I sized in. It almost immediately just starts working, so I'm good. By around this time, I'm trading on my phone. Okay? And what I've said in my past videos is seeing your trade on different charts really helps, because it just kind of puts things into perspective. But on this one, I was on my phone, and from here to here on my phone was already like this. I was like that. And I'm like, okay, I'm just going to take it. And it does this to me. I should have waited for this move. And I know in 2020 hindsight, it's a lot easy to say what you would have taken after the full chart has been shown. But knowing me and being aware of myself, I know I wouldn't have sold I wouldn't have sold here if I was watching this on my monitors or on my broker account. So, but either way, 114 bucks. You can't complain. It is what it is. Left some money on the table, but it is what it is. Okay, let me go over one more trade for you guys, and then we'll get to the other stuff. Let me show you this $103 trade. This is my first $100 trade. Throw money. I was playing a morning spike. My mistake was not keeping a percent on. I was watching Tim Bowen in the morning. He does pre-market prep, and he said something about the stock, so I did my due diligence, and I thought that this was worth putting my money into. So I ended up sizing in, and almost immediately, it freaking beautiful spike. So I sized in, beautiful spike, halt. I wasn't worried when the halt happened. Jonathan, what's a halt? So a halt is when the stock just has so much volume and liquidity, and it's just being traded so fast that the market makers they just can't keep up with putting all these orders in and out. They just can't keep up with it, so they need to hold it. And they pause it and they hold it, and then once they get everything back in, then it's open for trading again. So that's what it happened. When it's a halt down, that's scary. When it's a halt, I mean, any halts are scary, but this halt up in particular, I wasn't that worried about. So I stayed with my full position through that halt. After it got back open, I sold 50% of my position, and then it halted again, and then I was like, okay, yeah, I'm definitely gonna exit out once this comes out. And I was hesitant, but I just ended up taking out my full position because it's $100. You know what I mean? I hadn't made $100 before in the market, so I had to lock that in. So not keeping a percentage on, no, whatever. It is what it is. So that's that, you guys. Now let's get back to what's been helping me in the market. Okay, I got this down, and if you guys want to write this down, cool. What works for me might be wrong for you, and what's wrong for you may be right for me. That's what I love about trading. All this is, you find out what works best for you, and you double down on it. And this is what I've been finding that has been working for me. Being more aware is just helped me become more consistent. There's a lot of variables to be aware of, and a lot of things to take account of before you even enter a trade. It's not just, hey, I think this is, it's not just buy low and sell high. Ideally, that's what you want, but in order to be consistent, at least from what I've been finding for myself, there's a lot of variables that I need to take account of. And in my past videos, I could tell you that I just haven't taken account into everything, and maybe that small thing is what hinders me from making a loss a win, or making a smaller. Let's just keep it at that. Okay, so being more aware has helped me become more consistent. Being more aware of what kind of market we're in. You could answer this question in many different ways. What kind of market we're in general, not that good. I day trade penny stocks. So you ask someone what Amazon is, they know what Amazon is. AMZN. You know someone Apple, AAPL, right? What about AABB? OCGN? LTNC? No one's gonna know these companies, right? So I trade a very niche market. And within this niche market, there's money to be made. There's not as many plays as there was in 2020, but there's definitely money to be made. So just kind of keeping that into account, literally minute by minute, day by day, and hour by hour. Like I showed you in the last, I believe it was the first one that I showed you where I held all day. I just followed what the stock was telling me to do. I was respecting the market that day. That's all I was doing. I was respecting the market. And I just respect what the market tells me. That's all. Another thing is, before I even enter the trade, what does this company do? Very brief. This isn't something that I used to do before, but I've realized that this is important. Before I would just trade off technicals, like breakout, morning panic, or whatever I would just trade off technicals, not knowing what the company is. But now I do. I've added this. So what does the company do? Very brief. I go to Yahoo Finance. I click profile and I scroll down. It's this company makes medicines for blah blah blah. They ship out blah blah blah. Okay, so what I'm really looking for, what I'm really looking for is the sector. Is this a hot sector? Pretty much what that means is electric vehicles, crypto, NFTs. What's another sector? Financial services is a sector, but there's really not a lot of hot stocks running in that sector. But just to throw that as an example, that's a sector. Another one is I forget, but the hot three right now that you need to be aware of is Bitcoin, cryptocurrency, NFTs, stuff of that sort. So I see if there's a hot sector, and the next thing I look at is there news, and then if there is news, what kind of news? Okay, so did this company just come out with earnings? Did this company just come out with earnings? Are they merging with another company to do business? Is this company being bought out by some billionaire? Whatever the case may be. And then not only that, but you also need to pay attention to the price action from that news. So if this news just came out 2 hours ago or 2 days ago, you need to go back and look at the chart and look at the price action and the liquidity and seeing if the stock is reacting to that news, right? So after I do that, I look at the daily chart. Is there a daily move? Example, multi-day breakout, like I showed you, first green day or second green day. What I've been seeing in this market the past couple of weeks is nice, like a week or two, is a second green day. What does that mean? The general market has not been good, so a lot of stocks have been bottoming out. They've been hitting a lot of resistance levels, but as well, there's been a lot of support. And now, kind of daily, the market has been picking up again. I could play multi-day breakouts from them bottoming out from that channel there, and playing a first green day on a listed stock or also an OTC. But that's different. And then day by day, if the market is good, I could check it and look at pay attention to the price action and volume and liquidity minute by minute. In the morning to see what kind of market we're in, right? 5 minutes, 10 minutes, 15 minutes, seeing how it's going. and then making a decision based off that on whether I'm going to play a second green day and just um, uh, follow the trend of it continuing its of its price going up. Okay. Next thing I look at is resistance and support and VWAP. Everyone has different indicators on their charts. You know, you see all the lines and different stuff. Me, I only use resistance, support, and VWAP. Now, I guess I could be hindering myself from not using other indicators, but so far this is what's been working for me, and it's simple, and I'm not a smart guy, so this is what's been working for me, and I'm gonna keep it. Resistance and support and VWAP. VWAP, important. Not gonna go over that, but VWAP is important. Volume weighted average price. Okay, I'm gonna go over it very briefly. Volume weighted average price. How I kind of look at it as an indicator. If a stock is above VWAP, the longs are in control. If a stock is below VWAP, the shorts are in control. It's not an exact science. It's not 100%. I just kind of guide my trades off of that while using all this other stuff while I'm in the trade. Paying attention to price action, volume, liquidity. Let's say a stock it's a hot sector, okay? But there's no liquidity. It's not a lot of liquidity. What do you mean liquidity, Jonathan? Is there a lot of volume? Is there a lot of people noticing this stock? I want to be in a stock that a lot of people know about, because then that means it's liquid, and it can range, right? You can make money, you can lose money, but it's not just stagnant. So I'm paying attention to that. I'm also paying attention to, is this going to be a scalp or an all-day hold? And then I'm aware of how much I size in according to risk. So that's going to play hand in hand. So if it's a scalp, I'm going to try and keep my risk as tight as possible and size into that. So a scalp is pretty much, you're here, you're in and you're out. Kind of like the one that I showed you where it got halted. That was a scalp trade. An all-day hold was the hold that I showed you. That was kind of like midday hold, right? But that's still a longer hold. The other one was 6 minutes, $100 in 6 minutes. This one I made $20 for like the 3 hours, right? So sizing in according to that. I guess I'll just say it one more time because I know it's all mumbo jumbo. Sorry. I size in if I keep my risk tight. I do not size in if I have a bigger risk. Simple. And then I'm also aware of my emotions in the trade. Why are you nervous? Okay? Why are you nervous here in this trade? You should stick to your risk. If your risk is intact and you're okay with losing X amount of money, then why should you be nervous? Okay? Now the stock is going up. Okay, why are you nervous when the stock is going up? Well, I haven't been consistent. Well, okay, chill. It's going to be your profession. This is what you want to do. You're going to need to learn how to control those emotions. All you're doing, yes, you're making money, but all you're doing is you're just trading the pattern. So relax and let the pattern play out. Okay? Think that's pretty much it, you guys. That's being more aware of all of this and kind of confining it into one. And one thing that I said in my past videos, I just have a brain fart. One thing I said in my past videos is that I think trading isn't just entering and selling. It's a lot that goes into one, and kind of making this second nature and just repetitions. That's all it is. Repetitions. Maybe one trade I forget to put VWAP. It's happened. Maybe one day I let my emotions get the best of me. Happened. Maybe one day I wasn't aware that I sized into this for an all-day hold, but really it just should have been a scalp. It happens. No? Maybe one day I wasn't aware of, what kind of market we're in, and I sized in. And I was scalp. It happens. And like I said in my past video, I'm learning how to swing a bat. You know, swing a bat, you miss. You know, your elbow was up too high. You swing, you miss. You didn't step enough in that one. You swing, you miss. You took your eyes off the ball. You swing, you miss. You were scared. It got too close to you. You know what I mean? But I feel like the past couple weeks I've been swinging. Okay, cool, base hit. Boom, swing. Cool. I got on second base. Boom, boom. Swing hit. Cool. I hit it into outfield, but I still got on first base. You know what I mean? But at least I'm hitting the ball. I'm not trying to hit home runs all the time. No, home runs will come, but if I can consistently hit first, second, third base hits, I'm beating 5%. I'm beating 95% of the traders out there. So, thank you guys for watching. I know this is a long video. Thank you guys for hearing me talk my head off. But this is my process. This is my journey. I don't have a doubt on whether I could be successful on this or not. It's just putting in the work, putting in the time, being consistent. That's all it is. I enjoy it enough. I understand it enough, right? And I know what the opportunity consists of with this. And it's so great. I want to be around people by myself. Anything that messes up, it's no one else's fault. It's my fault, right? It's just me and myself, my scans and my screens, baby. And all the knowledge. That's it. And repetitions and all the data and know what I mean? Let's get to work, baby. Let's get to work. Let's get to work. Let's get to $1 million. I would love to make $1 million in trading. I'm not doing this to make, 50, 100 grand. I would love to make $1 million in trading. Let's give back to the people. Let's get rich, baby. Let's get rich.